Welcome back to Investing with Confidence. I am your host, Joshua David. We are having a good time. Stock market is a fun thing to talk about. We get to do this each and every week and helping our listeners hopefully make better investing decisions. If you happen to miss 2 tickets for the investing class, call 952-814-4410. This class covers some different topics like, discovering techniques the professionals use, self-directing opportunities, but also help you sleep better at night by knowing that you might be protected. So, Al, you ended that last segment with something a little bit different. I mean, kind of like a Wall Street is putting people in almost a one size fits all type of strategy. Think of it this way. I mean, I have a young child, and I bought a hat, right? And it did say one size fits all. But I'll tell you
Okay.
what, it fit me okay.
Yeah.
It did not fit his head.
His head disappeared,
It,
didn't
it
it?
disappeared. He couldn't even see it covering his eyes.
Yeah.
And that's kind of what Wall Street puts people
Right.
in strategies in a one size fit all. It may be different from you to myself to somebody else, right?
Correct.
So Wall Street, they're putting their people in, half of what they need, but they only get that half right. So what do you mean by that in the investing world?
Yeah. Okay. Before I answer that, let me just say one more thing about core strategy. We started talking about that in that last segment. One of the things that we want to do, and we talk about this in these classes, is to change your mindset. And most people are acting and functioning like a retail trader, like an amateur, not like a pro. So the mindset needs to be changed so you're doing what the pros are doing. One of the ways we do that is by introducing you to our core strategy, which is a strategy that is focused on the single most important component of any trade, and that's proper price. Proper price to enter, proper price to exit. And the important thing is identifying where prices turn, what causes that, who causes that to happen, and then how far is that price going to go. Those are the two important components, and core strategy is designed to help you do that.
Yeah, and just to clarify that a little bit more, until you mentioned, being a pro, we as retail investors, the public are called retail investors.
Correct.
We don't have to be a professional. We have to just understand how they are trading and just trade like
Yeah,
that.
it's just following in the footsteps of the people. It's just following in the footsteps of the people that know how the market functions. Not only know how it functions, they cause it to function in certain ways. So now let's get back to what I started or ended the last segment was, why does Wall Street only get it half right? And I think this really was reflected in what happened here just recently. We had a class, and it was a pretty good-sized class. There were some people in there that were in their 20s and 30s. There were some that were in their 70s. Maybe one guy might even have been in his 80s. And some were just getting started, and then some were in need of extra income. Some were retired or nearing retirement with millions of dollars and needed to protect it and still grow those accounts. Yet when I asked people what they were doing in the markets, how they were addressing the markets, every one of them was doing the same thing.
Isn't that amazing?
Yeah,
Were they all the same age?
they were no, and that's the point. That's why I introduced that some were 20, some were 70 or 80. So regardless of what was actually needed, regardless of the unique makeup of each individual, everyone was doing the same thing. That's what I mean by Wall Street has it only half right. And the number one thing, here's the good thing that Wall Street does. It has people active in the market. So that's the first thing. Understand that the market has some great benefits that you have the potential to take advantage of, but there's a different way of approaching the markets if you have short-term needs or if you have long-term needs. Typically, the people that have short-term needs need extra income. Maybe they're just starting out, or maybe they're retired and they want to generate income off of their retirement accounts. Or maybe they're retired and they've worked 30 or 40 years hard for this amount of money that they have in a retirement account, and they want to make sure it's protected. They also want to grow it so they're not just drawing it down, dwindling it down to nothing. So there are different assets for each, and there are actually different assets and different strategies, even in the income part of it and in the wealth part of it, that would be better for one person more so than another. Everybody's unique. Everybody has, different personality makeups, different needs and goals, and those all need to be addressed. But Wall Street basically has you following only one strategy. And understand this, that financial advisors, the people that you're working with, That's a business, and it's making money off of your money. Their primary goal is to grow assets under management. And that's not necessarily the management of assets. That's in many cases or most cases handed off to somebody like a mutual fund manager. But these people are compensated on the amount of dollars under management and for selling you investment products that their company provides. They're paid regardless of your portfolio performance, and there's numerous conflicts of interest because of that. And the only person that can really control your assets without a conflict of interest is you. You know, there are some people that work for companies that maybe only sell mutual funds, some only sell annuities, some maybe only sell gold. What do you think their bias is going to be? It isn't necessarily what is in the best interest for you. It's what's in the best interest for them and for their company. So one of the keys to successful financial security is figuring out which of the many available investment strategies is going to work for you. Which one's best for you? And first, you have to have the knowledge about what they are. You have to know what they are. And most financial advisors will give pretty much generic advice. It's not personalized. And as you mentioned, there isn't one size fits all. Everything needs to be customized to you to give you the opportunity to realize your full potential.
You're right. And you can almost think of it as a personal trainer as well. If you have somebody that wants to build, be a bodybuilder, they're going to have a different workout plan than somebody that wants to be a runner. A runner doesn't want to have big muscles. So they're going to have different plans based on their goals and objectives. And that's why you do need a strategy that's designed for you, not just a one-size-fit-all strategy. And Al teaches these different concepts in these investing classes, especially if say you're nearing retirement and you want to understand, hey, what can I do differently? Or maybe you are retired and you want to protect what you have. You want to be in those right strategies for those different objectives. So callers 1 through 10, I want to invite you to this class, 952-814-4410. It's a free investing class. It's 2 hours. You can text the word invest. Everybody likes to text these days. So just text.
Right.
Text
I even do it.
You do? Nice. Text the word invest to the number 484848. When you do that, you're going to get a link back in a text. When you click that link, pick a date. When you do that, you're also going to receive a free crypto class by doing that. So, Al, we talk about different assets, and you had mentioned that just briefly just a couple minutes ago. And there are a lot of people that think they just want to buy and hold stocks right now because they're doing really well. And I was just doing some research on a website talking about the Buffett indicator. Where are we at with market valuations, right? And it says here the stock market is significantly overvalued. Everybody knows that, right? According to the Buffett indicator on historical ratio of market cap over GDP. Okay. Currently at 204% over, right? Which is likely to return a negative 3.1% return from this level of valuation, including dividends. So basically it's saying, this is according to the Buffett indicator, that's saying that over time in the next business cycle, it's going to show a negative 3.1 rate of return.
Yep.
So that's why you need these different assets for shorter term trading and investing to capitalize or have the potential to do that during any market conditions. So talk about that a little more.
Well, yeah, what you were just talking about with the Buffett indicator, if we're going to have that average negative 3%, what it means is basically that's what the stock market, that's what maybe the S&P 500 is going to return, which means that maybe you need to look elsewhere. Either you need to look elsewhere or you need to identify which components of the S&P 500 might outperform. Warren Buffett, we call it the Buffett indicator because Warren Buffett thinks it is the single most valuable indicator of the value of the stock market. When it hits around 80%, in other words, when the full market cap of all the stocks is 80% of GDP, then he pulls back and he doesn't see good values. Now you said it's around 204%.
Yep, 204%.
The value of all of the stocks, the market cap of the stock markets is 204% of GDP, all the goods and services produced. That is huge. That puts this at the most highly valued market, I believe, in history.
It is, yeah.
So Warren Buffett's sitting on well over $100 billion of assets, or of cash, waiting for good values in the stock market. Now, is he just sitting there not doing anything? No, he's using other assets. Warren Buffett is a player in the options market. He makes about $8 billion a year in the options market. But this kind of gets to the second part of what I led into this session with, which is not only that Wall Street only gets it half, that only has you participating in half of what you should, but they only get it half right. And what I mean by that is the part they get right is that they have you active in the market, but it's only half right because they leave out significant components that are needed if you want to have the opportunity for true success. What are those components? Well, number one is protection. Ask yourself this: if we do, let's say this next week that we have a major crash, a black swan incident that causes the market to go down 50%, what's going to happen to your portfolio? How are you protected so that doesn't happen to you? For most of you, you can't answer that question, or you are going to say, I don't think I'm protected. The other thing is emphasis on price. We think price is the most important component of a trade. It will result in the lowest risk entry, the highest reward potential, and the highest probability of it working in your favor. Wall Street pretty much says just get in the market and then don't worry about what happens because you're going to hold on to it for years. And then also they disregard one thing that we think is really critical, especially if you want to try to maybe catch up, if you think you're a little bit behind, or if you're in retirement and you don't want to take a lot of your retirement money and put that into the stock market. That's the leveraged asset component of the markets. Most of you, and in fact, earlier I said that the people that were in the class, whether they were 20 years old or 80 years old, they were all in the stock market, either with mutual funds, most of them mutual funds, or some with stocks, maybe exchange-traded funds, but none of them were using any of the leveraged assets. The reason? They don't know about them. They don't know how to use them, or they've been told that they're too risky. Well, anything that you don't know about has a level of risk to it which you probably don't want to be involved with. You need to know how to manage that, but understand how they work and then how they can be controlled, how the risk can be controlled. But the leverage, by leverage, we mean that the amount of money that you have in a position is much smaller than the position itself. It's like a mortgage on a house. That leverage can be 10 to 1, 20 to 1, 50 to 1, maybe 100 to 1. That's taking the assets that you have and it multiplies the impact that it can have on the markets, on your returns. When we talked about Warren Buffett sitting in cash, he's got well over $100 billion in cash waiting to come into the market. Those are the things that can be great for us down the road because it's not just Warren Buffett. I think a lot of the big firms probably also are sitting high in cash, getting ready to participate when they feel the values are there. Better to follow what they're doing because they know when those values will occur. Better to do that than for you or me to have an opinion based on what we think should happen, because most of the time that's going to be the wrong decision to make.
Yep. And just to, kind of go a little bit deeper, that as Buffett's in cash, I'm assuming he's not just sitting in cash. He's using these other assets like options, like the currency market. He's not going to just sit in cash and lose to inflation. He's going to use the Forex market to hedge his dollar. He might be buying dollars or selling dollars based on what it's doing to protect his U.S. dollars. Right. And that's what the smart money is doing. These techniques and strategies, these are available to us. And you got to ask yourself, do you have enough for retirement? Are you prepared for retirement? If the answer is I don't know or no, now is the time to do something a little bit different. So it starts with an investing class to see these different techniques and just gain more financial literacy. So I want to give you away 20 tickets for this investing class for callers 1 through 10. When you do that right now, you're going to receive 2 tickets. I'm also going to give away the Financial Quick Start Kit, which has some topics like 3 retirement strategies Wall Street does not talk about, but also strategies to profit from a stock sell-off. 952-814-4410. You can also text the word INVEST to the number 484848. You're going to receive a link back. When you get that link in that text, you got to click the link, pick a date. When you do that, you're also going to get a bonus here. It's a free crypto course. Text the word INVEST to the number 484848. Al, what's next?
Well, let's talk about why your retirement account might not have a chance of providing the returns you potentially could have.
So let's talk about returns and potential in retirement next. 952-814-4410. This is Josh and Al, Investing with